Our first inaugural keynote speaker on the top trends shaping fintech and banking in Pakistan. So please put your hands together for Mr. Nadeem Hussain of Raqami and Planet Group. And he will share with us his global insights in the local context, offering a unique glimpse into the future and making sense of the trends that are shaping our industry. Mr. Nadeem, please join me.
Assalamu alaikum, Khawateen Hazrat. Good morning, ladies and gentlemen. It's indeed my pleasure to be here. This is the first conference after the award of the digital bank licenses. And I think it's a very opportune time given the galaxy of speakers we have. Especially, I look forward to hearing from our international partners and Dr. Rashid Hussain. Dr. Rashid Hussain has been instrumental in creating regulations which have moved the needle. We started off with the regulations for the microfinance banks. Pakistan is one of the few countries which had separate regulations for the microfinance banking segment, and we have close to 8.5 million active loan customers as part of that regulation. About half of that, half were MFIs from the SECP. This followed by the branchless banking regulations. Those again helped create the biggest impetus in creating companies like Easy Paisa, Jazz, and subsequently the other players who have come into this. And those entities together move around 8 to 12% of Pakistan's GDP through this enabling environment that was created. This followed by the PSO, PSP licenses, which were not as successful because immediately after that you got the EMI licenses, and we are seeing some success in the EMI license framework, participants, especially from the customer journey perspective. And now the latest licenses that have been awarded are the digital bank licenses. And very early days, 5 licenses, but the hope is that these 5 licenses will help move the needle. And why do I say that? Because as far as financial inclusion is concerned, as far as digitalization is concerned compared to a cash economy, and have no doubt we are a cash economy, we have 3.5 to 3.4 trillion rupees circulating in a system which don't see the light of any bank account. And it's not easy making that transformation, making that behavior change from a cash economy to a digital economy. So what I've been asked to do is talk about what I see are local trends, some of which are influenced by global trends. Some are based because of what we are. We are fairly unique in a developing country. No developing country has as much cash in circulation as a percentage of money printed like we do. We remain a cash economy. We remain an economy which the bulk of the transactions are not captured by any tax framework. We remain an economy where the SME sector, while employing a large percentage of population, receives less than now 6% of total lending stock. If I compare that total lending stock, SME is less than 6%, used to be 17%. But things are changing. And things are changing not from the conventional banking sector. And, I am most popular with my friends who are CEOs of conventional banks because of the acute, what I call positive or constructive criticism, I lay on them because I believe commercial banks also have the ability to move the needle, but have had singularly failed to do so. But the opportunity still exists. The first trend I see, and it's already started to happen, is embedded finance. Embedded finance globally has taken off. It is huge. In Pakistan, we're just seeing the tip of the iceberg. But the opportunity is huge. Why? Because the entire commercial banking industry, the 34 commercial banks, the 8 Islamic banks, put together have less than 2 million active loan customers in a country of 220 million people. Less than, if I'm being generous, it's about 1.2, 1.3 active loan customers. So clearly an opportunity for players who want to be able to start with the lending process. This embedded finance, we're already seeing elements of it in entities regulated by the SECP, where buy now, pay later loans are becoming much more popular. There are entities which are doing 30,000 loans a day disbursement with a revised customer journey. So we know the opportunity exists. Unfortunately, the buy now, pay later and the nano lending business, although regulated, has a large swath of players outside the regulated framework with predatory lending rates. So that's a challenge right now. The total number of active loan customers in Pakistan, again, is about 10 million. Again, so, financial institutions who really want to move the needle, have to look at the lens of the lending framework. Now, the counter argument could be, look at where we are in our economic cycle, potential default rate, reduction in purchasing power. But my sense is, out of the 220 million people, even if eligible customers are probably about 50, 70, 80 million. And we are sitting at active loan customers of 10 million, 8.5 in the world of microfinance. And out of that 8.5, probably around 3 million now are nano lenders, nano borrowers, loans of less than 5,000 rupees for a week or 1 month. As e-commerce started taking off, we're probably around $4 to $5 billion, dollars of the e-commerce. The introduction of new companies which are capturing data of the Kiryana store, the superstore, the pharmacies from the FMCG providers who are capturing data for input providers to the agriculture sector from major providers of fertilizer, DAP, and seeds. So this embedded finance we're seeing globally is a function of data capture and the ability to lend based on data points, starting off with closed loop lending and then moving on to obviously beyond that. My sense is this number of 10 million active loan customers, between the digital banks, licenses 5, the commercial banks, which will now, my sense is, wake up and be major competitors for potential lending, because they're the people with the lowest cost of funds. And they're the people with tons and tons of existing data. And the new lenders which are being financed, the NBFCs, the NBFIs by the ACCP, this number can potentially go to 30 million over the next 5 years. Now, you could say it should go much higher, but if you look at our history, we've been singularly slow in the lending piece of the business. We've been singularly unsuccessful in actually capturing the data that already exists. But this global trend of actually database lending, and it's been around for a long time, but we haven't been able to really exploit it to get to the numbers that we want. I think the State Bank, and this is my speculation, State Bank's reason for giving licenses to the 5 successful applicants was they're actually going to be in lending, because if you want to be a payments bank, State Bank's view was go and get an EMI license. Why do you need a license? There are only 5 licenses. So they have huge expectations from people who've been awarded the license, and they want to see the lending piece. And if you look at our segmentation, then we see SMEs, agriculture, women, students, blue-collar workers, all not represented on the lending side and to a larger extent on the saving side. So the first trend, ladies and gentlemen, is embedded finance, the use of data to provide small ticket loans, typically on a closed loop basis and for a relatively shorter tenor as the order cycle goes. So I see that, and as I said, I see a number raising from 10, and if you're looking at formal commercial banking from 1.2 to probably around 10 million in a short period of time. And I see commercial banks actually waking up and providing a serious challenge to the digital bank. Digital banks have one particular advantage in the sense that they're not stuck with the legacy system. They're not stuck with the existing DNA, which hampers this transformation. Globally, banks have transformed and transformed successfully. But if you have an existing system and you have existing DNA, the challenge is 10 times as more. But you're starting from scratch, you have a better opportunity to work on the customer lens. The second trend, which is happening globally, but we are very far behind, but I see again happening, is fractionalization and tokenization. So on the fractionalization, tokenization part, the regulations for fractional real estate has already been provided by the SECP. The license, is not a significant capital requirement. Real estate is a major asset class in Pakistan. So my sense is the last chairman talked about awarding 5 licenses as well. And we will see players coming in who will provide fractional real estate. And then obviously it's up to the existing players how you coordinate or how you collaborate with them, because everything doesn't need to be made within the bank itself. Fractionalization of asset classes is going to be, in my view, a major trend or major asset class in Pakistan. And the 3 major asset classes that I see happening, real estate for sure. Fractionalization real estate is just reducing the amount that you can invest in a property to a level which is available to the common man. The other big trend, I've been talking about this for a while, but it's difficult to get it into execution, but will now happen, is fractionalization of gold. You should have an app where you can get on there, and if you have 100 rupees, 200 rupees, you should be able to buy virtual gold backed by physical gold or a PMX contract. Because people in Pakistan don't save in bank accounts. If you look at the saving ratio versus GDP, it's one of the lowest. And the reason it's one of the lowest is you're typically getting a negative rate of return from the bank. Every time you put money in the bank, if inflation is sitting at 30% and you're getting 15%, you're losing money. The journey to open a bank account has been significantly improved, again, by the enabling environment. One of the few countries in the world where you can open a level 0 bank account in under 1 minute. Already exists. New regulations have finally come out, which are going to allow you to onboard a AOP, private limited company, digitally. Right now, if you are a really good bank, you probably take 1 month to open a company account. And if you're the average bank, you take 2 months. 2 months to open a private limited company account or account for a startup. Major opportunity for disruption over there. So Pakistanis save largely in gold. So why have we not come up with a solution for digitizing, tokenization, reducing the amount and making it liquid for the average person to save in gold? Real estate, because the average ticket size is so high, we can't, average person cannot invest. So also, the money that's in circulation, 30% of that is actually saved through the ROSCA's committee system. We still don't have a digital committee which is obtained scale. So the lens that we still continue to use is our internal lens of products we develop as opposed to the lens of what the customer wants. Everybody talks about we're customer-centric, customer centricity, but why don't we have solutions which the customer is looking for? And we haven't done this, okay? And I think that's where the people who are going to be winners are the people who develop these products, which are right in front of us, and for the last 5 years, we haven't done anything about it. So fractionalization, tokenization is going to be the next big event. Big trend I see. Third, I see consolidation and some blood on the street. Consolidation and collaboration, what I'm seeing is all the people who have data and all the people who have deep pockets in terms of risk appetite, balance sheet, and funding. Now, we've talked about this, that banks are long on capital, short on idea, and fintechs are long on ideas, short on capital. But this marriage is yet to take place and scale. And this trend I see happening, that with the number of fintechs which are coming up and non-fintechs also. And my thesis is that any company with a large customer database will eventually get in the fintech business. You will become a lender at some time, and the lenders have to figure out how to be part of that ecosystem, because if one stage, one of these entities wakes up and says, let me get my NBFI license myself and go into the market and fund myself, then you're going to have a problem with being, if you're just a partner and not embedded in that. I see Alexandra moving closely up, so I need to go faster. Okay. So third thing is you're going to see collaboration. And the people who are willing to collaborate, to open APIs, are the people who are going to succeed. And certainly, that's part of what Raqami Bank is going to do, but I'm sure the other digital banks and the existing banks will wake up and benefit from all that's happening in the ecosystem, rather than believe that they're the fountains of all knowledge and all product services. The fourth thing that is happening already there, and we are considered top 5 or top 6 in the world, is the use of investment in cryptocurrency in Pakistan. If you look at Coinbase, if you look at Binance numbers, they're saying, based on geofencing, they can tell the location of the account holder. 10 to 15 million active crypto wallet holders in Pakistan, with a holding estimated between $8 and $12 billion, totally outside any purview of the regulator in Pakistan. The view was that crypto is a speculative asset, and as such, the people in Pakistan don't know how to handle this. However, the reality is, I agree it's a speculative asset, not used as a medium of exchange in Pakistan. But if you have 10 to 15 million active crypto wallet customers, which is pretty much not very far from your active wallet customers for fiat, why can't we work on figuring out how to bring this into the net? Right now, all I have to do is go to an exchange company, say I want to open an account. I can open an account on Binance, or other, platforms. I'll give the local exchange company rupees, and using his network, he'll buy the coin for me. And subsequently, if it's the Pakistani sale taking place, it'll happen over the IBFT or Rast in Pakistan. This is happening. So we must figure out how to bring this formally back. And that, as I said, 10 million customers, 10 to 15 million active wallet customers is a significant activity which is not being captured. And in my previous point, I missed collaboration, I think is the key, but I also see blood in the street. I see some EMIs closing down, because if your only option is payments, the way our payment is structured with IBFT and Rast under 25,000 being for free, there being a cash and charge by the agents, and if you're not going to have a partnership in selling, you're probably not going to make money for a while. And with the global lens now that we want to see a path to profitability, and if you're burning money, you're going to run out of cash. So that is something that we're going to see on the people who are just focused on payments and haven't worked out the unit economics. Ladies and gentlemen, I think it's a great time, despite the problems we have to be in Pakistan, to be a player and be an investor in Pakistan, because when there's blood in the street, there's opportunity. There's opportunity for collaboration. There's opportunity for, if you look at the customer's lens, you will succeed. I thank you for your time, and I look forward to an eventful day. Thank you.